Monday, October 3rd, 2022, Monaco 64, home of alternative economics and contrarian views. By the time you listen to this video, I'll be probably flying away from the UK. Yes, this was recorded on Monday evening, London time. It's around 6:45 p.m. And after this brief market update, you can also listen to an interview I did with iEarlGrey on his channel last week. I think you will find it interesting. He's an English guy based in Russia, St. Petersburg. But what I wanted to talk about this evening, and it's going to be, of course, the next day, is whether the markets are smelling a Fed pivot, because we're seeing some big moves in precious metals, big moves in the stock market, and also a relatively big move in the foreign exchange market as it concerns the pound. Yes, we've had some economic data from the US. For example, Monday we had the ISM manufacturing PMI that came out at 50.9. It was expected to drop from 52.8 to 52.2. So it dropped quite a bit more than expected. It's still above 50, which means that there's still expansion in the manufacturing sector. But the ISM manufacturing employment, that dropped from 54.2 to 48.7. So that was a very weak number. And the prices paid, that dropped from 52.5 to 51.7. So maybe that has exacerbated the move higher in the markets. Some people are saying it's because it's the beginning of the fourth quarter, so investors are buying the stock market. The stock market, of course, has had a very bad year so far, so maybe that could be a little bit of it. And also, we're seeing Credit Suisse, for example, was down like 10% earlier today, and it has rebounded. And I saw as well that the Norwegian central bank today, they had to do some kind of emergency operation for their banks. They said it was because it's the tax season, but I'm not too sure. So I'm beginning to think the market is smelling a pivot, not just the Bank of England like we saw last week, but the Fed. And why do I say that? Well, if you look at the Treasury market this evening on Monday, we've got the 10-year yield down 17 basis points. That's quite significant. It's at 364. The 2-year as well, which is more of an indicator of short-term rates, that's down as well. 12.5 basis points, back down to 408. And up until recently, the Fed had said that, or a lot of the FOMC members, that the short-term or Fed funds target would probably top around 4.5%. So the fact that the 2-year is coming off here like that, which is a kind of proxy for the Fed funds, is quite significant. And that's what I think is happening. It's the markets always discount ahead. So let's quickly go through what's going on here. So yeah, it's 6:45 p.m. London time. We've got spot gold actually up more than 2%, which is very unusual. It's at $16.9660, up $35. We've got spot silver up 160 cents or $1.60 or 8.5% at 2064. I think the real important level is going to be probably around 2130, and we're not very far away from that level. Of course, the stock market is doing well. We've got the Dow up 2.5%. The Nasdaq is up just over 2%, and the S&P is up 2.5%. And in the currency market, actually, sterling is up about 1% at 112.75. Where do I think sterling could go to? Well, as I've said, 114 was the low from March 2020. And when we broke through that level earlier in the last few weeks, the market accelerated lower. And a lot of times markets go back to retest that breakdown level. So we could still go there to 114. I've noticed, though, that even in pound terms, gold has actually rebounded. It has been volatile, of course. We're back above 1500. We're at 1505. So the other currencies are pretty steady, actually. The euro is actually, let's see, virtually unchanged versus the dollar. So, and in the commodities market, we've got crude continuing higher. It's up almost 5%. WTI, Brent is up about 4%. So, yeah, is the market discounting a Fed pivot? Very possible. And I'm not sure what happened today at that Fed meeting, what they said. And I'm sure the bankers on Wall Street probably aware of what's going on at the New York Fed. So with that, if you want, you can listen to my interview with iEarlGrey now.
So, welcome back, everyone. You've heard from Mario Monaco64. You've certainly heard me mention him before, and I had a chat with him over on his channel before. But today I have the honor and pleasure to have Mario with us today. So, Mario, if you'd like to introduce yourself to everyone.
Well, first, thank you for having me on your channel. I appreciate it. Yes, I worked in the financial sector since late 80s, 1989. I started in a small fund manager in Geneva, Switzerland. Then I moved to the city of London in 1992. And I've been in the UK since then. I'm originally from Brazil, but also with Italian nationality. And in the financial markets, I worked in the bond markets, which is basically where government bond markets, where interest rates and yields are set for credit throughout the economy. Yeah, I was in the city till 2012. And since then, I've tried a few things. I opened a business in 2012, pawnbroking in the UK. That really didn't take off, so I shut the company. And then in late 2015, I thought, what am I going to do now? And I started making videos on YouTube about basically trying to talk to the general public as I used to talk to my clients. And my clients were not private clients, they were institutional clients. So I spoke to bankers, fund managers, head of corporate treasuries. And so, yeah, that's what I thought. I'm going to try to explain to the layman out there what the system is all about. And I also got involved in gold and silver and the Austrian School of Economics in 2002 in a private capacity, because even though my degree was in international relations and economics, BA degree, they don't teach you about the monetary system. And what President Putin said in St. Petersburg in June, they don't teach you about the mythical value of the dollar, that they can print trillions out of thin air. So yeah, that's a big part of my channel as well, explaining the current system, but also explaining the fragility of it because of the fact that it's not anchored by any real value like gold and silver. So yeah, my YouTube channel is Monaco64. I'm almost up to 70,000 subscribers. And yeah, I make a video every day about whatever is happening out there with a tilt, leaning towards examining things in an Austrian School of Economics perspective. In the Austrian school, they espouse small government, sound money, and free markets, basically. And they believe that if you're free economically, it doesn't really matter politically what's happening. And and I'll also make a live stream every Sunday at 9 p.m. I'm fairly active on Twitter as well at Maneko64.
Fantastic. You also feature some amazing guests. You've had them like really experienced experts. Really, from what I've seen, I enjoy your video updates every morning as I get a little bit of an insight into the UK and the financial situation there. But you don't just focus on the UK. I've been fascinated by your Austrian School of Economics theories and the materials that you provide in there and recommend the books. Unfortunately, it's difficult for me in Russia to get hold of those books that you mentioned, but you also go back through history as well, which I love and enjoy, and there's a lot there for it. So, guys, if you're not aware of Mario's channel, I highly recommend you head over there and subscribe now, because in my opinion, Mario's advice, view, and interpretation of events are probably invaluable, and at this point in time, the most important it's ever been. Mary, you mentioned you're nearly at 70,000 subscribers. From my observation of your channel, you've experienced a lot of growth very recently. Is that correct?
Yeah, in the last couple of months, it's improved, but also in the beginning of last year, there was a lot of growth. But I would say over the long term, it's been fairly gradual, fairly
Mhm.
steady. It hasn't been really, it would be good if it went exponential, but it is what it is. And one thing I would say about advice, yes, none of what I say is financial advice, but it's what I think is my opinion. Of course, I do give some kind of advice more related to the way things are, but not purely financial advice.
Excellent. Thank you very much. So, what I'd like to get into with you today is, to begin with, we'll talk about Putin's speech yesterday, which was absolutely an historic speech, in my opinion, and probably one of the most important speeches we've heard in our time, especially with the depth that he went into. And I specifically want to zone in on some of the financial aspects that he talked about there with you. But before we do, I'm going to sort of skip ahead a little bit to see the Western response to this, because for me it felt a little bit like toys being thrown out of the pram. So I'm going to just show this article on the screen. This is CNN Politics, and of course the beginning of it has a video of Biden and his stuttering tantrum that he unleashes on everyone in response. But as I scrolled down through to get the Western spin on all this, it mentions about the sanctions that the US is threatening in response. Now, first of all, that made me smile quite wryly, because I thought that the West was pretty much out of sanctions, and it does appear to be that way, because now they're zoning on individual people. So just to quote CNN here, these sanctions here that are to target the Russian economy specifically, they're saying that includes sanctions from the Treasury Department on a key player in keeping the Russian economy afloat, Elvira Nabiullina, an economist who's been leading Russia's central bank since 2013. So they're zoning in on the head of the Russian central bank, which I find fascinating. What's your interpretation of this?
Yes, I saw an article as well a couple of days ago about the new sanctions, and I was reading through all the people they sanctioned. And but when I saw that they sanctioned the central banker, uh, Nabiullina, I thought, wow, this is serious, because there's a really good book called The Tower of Basel, which I've recommended in my videos, and it talks about the Bank for International Settlements. And all central banks in the world, all the central bankers there, they go there like every other month, and they're members of the BIS. The BIS is where during World War II they allowed the Germans to do business still with the West, with the Allies, believe it or not. And up until I saw that sanction on her, I thought, wow, this is just a game. It's the bankers playing us both sides. But that makes me think maybe this is for real. If they're sanctioning the head of the Russian central bank, is that gonna block her from going to Basel to talk to the other central bankers? And if so, I think it's really, really big, really huge. It's just speculation on my part. I'm not sure. But yeah, I thought that was the most significant sanctionee, if you can call it that.
Yeah, that really jumped out at me. You mentioned about the BIS, and you've touched on that. So even in the Second World War, they didn't sanction the government in power there and all their assets. And I believe the Swiss didn't seize the currency reserves or gold in their banks that belonged to the government in power. Let's say, is that
Yeah.
correct?
Well, the BIS is in Basel, but it's actually a sovereign state. So the Swiss have nothing to do with the BIS except that the BIS is in Basel, Switzerland. So yeah, I mean,
But what I mean to say is the Swiss remained neutral in the Second World War, and as we know, they've dropped that now, I believe.
yeah, I guess so. With what's happened in the Ukraine in the last since February, they've taken side. They've kind of gone off their neutrality. And what's interesting is that even during or in the run up to World War II, the BIS allowed the Germans, when they invaded Czechoslovakia, to keep the Czechoslovak gold. There's a part in the Tower of Basel where it talks about how even the Bank of England allowed the Reichsbank to take Czechoslovak gold that was in the BIS account in London at the Bank of England. So, yeah, that's why I think that might be significant, the fact that they're gunning for the central banker. But it's interesting that CNN says that the Russian economy depends on her. They clearly don't understand an economy, because finance
No.
is the tail and the economy is the dog. But the West has become the opposite. Finance is wagging the whole economy.
I like that you referenced Wag the Dog because that's a brilliant film. We'll get into that actually just a little bit more in this article because here it goes on to say US officials grudgingly acknowledge that Nabiullina has done an effective job managing Russia through this initial phase of the sanctions, just as she did in 2014 after Putin's Crimea annexation triggered a much less severe round of sanctions from the West. And here it goes into the actual things that they attribute to her. Nabiullina has deftly raised interest rates, imposed capital controls, and sought holes and workarounds to float an economy under siege. What do you reckon to those things? Of course, my first reaction was, yeah, Nabiullina did what all of you in the West are so scared and too afraid to do and hike those interest rates as needed.
Yeah, and it's interesting that they're saying this now. Where were they 6, 7 months ago? I think Biden was calling the ruble the rubble, and yeah, something seems. It's almost like they're admitting, Russia did the right thing, and
So
yeah,
then my question is, if they're saying that Nabiullina deftly raised interest rates and that saved the Russian economy, why are they not doing the same? 20%, boom, straight away.
because they left it too late. We had the 2020, 2021 crisis, and I think the U.S. money supply went through the roof. From like M1 went from 2 trillion to 20 trillion, M2 as well, and they also injected fiscal stimulus. In the US and the UK, they paid people to stay at home and not work. And then they just they thought things were going to go back to normal, to pre-2020, instead of in terms of inflation and monetary policy. They thought, oh, it's okay, it's going to go back down to 2% inflation, we don't need to raise rates. And yeah, and I even remember Jay Powell being asked in Congress in February of 2021, when a congressman from Ohio actually said, are you not concerned that with M2 growing so exponentially, that's going to cause rising prices or inflation? And he said, well, that has no correlation with inflation. He said the growth of money supply has no correlation with inflation, even though we know that the growth of the money supply and credit is inflation, which results into rising prices. So, yeah, they've dragged their feet, and now they're like trying to they're going too much the other way. And the reason why I think they didn't raise rates last year is because they know that our system is up to here in debt, all leveraged, and a lot of derivatives as well. And if they did, everything would implode. Just like it is beginning to implode, it seems, especially here in the UK in the last 7-8 days. We've seen the whole pension system almost come meltdown. The government bond market also was in meltdown mode, and the Bank of England had to step in and inject those mythical pounds, as President Putin would say.
Yeah, we'll get to that. I also want to discuss, after we've moved away from Russia, about Liz Truss and her emergency meetings and some of the stuff that's gone on there. But we'll hold that thought for just a moment. I'd like to hear if you agree with this statement. Quote, "A good central banker can do things to buoy the currency," one senior US official said earlier this year. They have a very good central banker. We knew that then. We know it now.
Wow. Yeah. Yeah. Well, I think even though I'm actually against central banking, if you're going to have a good central banker, I would say she did a good job. They did raise rates right away when all the sanctions are imposed, and then now they've been able to cut rates. And I don't follow the Russian economy that much. You might be able to tell me, but I think that the rate of inflation hasn't come down, but the rate of growth has come down. They've managed to do that, and they've managed also to strengthen the ruble, because at one point the dollar was worth 140, and now it's around 60, and it even strengthened a little bit, the ruble, this week. So that's the other thing people don't understand, that especially here in the UK, that a weak currency versus the dollar, which is the reserve currency still, means that you're buying less things. So that means higher prices. So yeah, she did do a very good job, and maybe they should appoint her to the Federal Reserve Board. It's a
Yeah, they've
fair
poached the other team player. Just to give you an update, at the time of recording, I just refreshed on Commerzant. It's $58.45 to the ruble, 56.7 euros to the ruble, and 8.34 yuan to the ruble currently. So it's dropped back because that went down to 55 and 51 or something yesterday. I keep half an eye on it.
The other thing I would say about the Russian economy is, because you can look at the bigger picture, is that it has very little national debt, and it has very little external debt. If you look at US debt clock, you can go into the world debt clock. The public debt to GDP in Russia is 18.16%, and the external debt is 38.4. If you look at the UK, the public debt is 103.77%, and the external debt is 290.47%. So it was not just Nubulina, hopefully I pronounced that right, that saved the ruble. It's the fact that I think the Russian economy has been run fiscally. The government has been run quite well compared to the West. Even in 2020, for example, in the UK and the US, we ran 15% budget deficits because of COVID. But I looked at the Russian number; it's more like 4% deficit. So I think I think the West thought that Russia was leveraged and indebted like them, and they thought we do these sanctions and they're finished. But I think the key secret for Russia is that it's not a leveraged and highly indebted government and economy.
How influential do you think the fact that the economy is based on commodities or the exports?
Yeah, that helps as well. Yeah, Russia is the biggest country by area in the world, and it's probably the richest country in terms of natural resources. And of course, the early this year, and not only this year, but even before the Ukraine crisis, commodity prices are going through the roof. And what the Ukraine crisis did was just push it up a bit more, but not, all the growth had been prior to that because of all the money printing we saw since 2020, and Russia benefited from it.
So, do you agree with Putin in his speech at the SPIEF, where he said that a lot of the issues that the Western economies are facing now have nothing to do with Russia? They were self-inflicted back in the pandemic.
Yeah, I do. And he said, yes, what happened in the Ukraine, he said, exacerbated the problem. But we have to go back to, I mean, we can pick many dates, but I like to pick 1971 because that's when Nixon took the dollar off the gold anchor. It wasn't really a gold standard, it was a gold exchange standard. And ever since then, you look at all the charts of national debt in the U.S. Or in any other country, or it all starts going up like that after 1971. So all the troubles have been brewing since then, I would say, and they've been lucky because ever since the early 80s, the cyclical how can I say, the bond market has been in a cyclical bull market, which means that when bond prices are in a bull market, it means that yields are going down, because when bond prices go up, yields go down. So we've had 40 years of easy credit, i.e., interest rates always going down. And that allowed us to, unfortunately, live beyond our means for 40 years. And I guess Russia was not part of this, because up until the fall of the Soviet Union, it was kind of separated from the West. And Russia, I think Putin said yesterday in his speech, was people were starving, everything collapsed in the 90s. So Russia's kind of in a different cycle. So they've started from nothing, and we've been living beyond our means for 40 years. So that's how I see it. And I think now interest rates, unfortunately, are turning, and there's nothing that the Bank of England or Powell can do about it. The Bank of England announced some more QE earlier this week, even though they're supposed to be doing QT. But I've already read that bond traders in the city are saying the 65 billion is not going to be enough. So there you go.
Wow. Let's finish up just this article very briefly. The US will also impose sanctions on Nabiullina's top deputy at the bank, as well as Alexander Valentinovich Novak, the deputy prime minister, US officials view as central to Russian efforts to increase Russian economic output in spite of the sanctions regime. Do you have any comments just to add to that last bit?
Yeah, well, I saw that the UN Security Council, I think there's 15 countries there, and they voted to reprimand, Russia and this they call it an annexation, a sham. But I saw that China, Brazil, and India abstained. They didn't vote against it, but an abstention is as good as, I would say. So I don't think. I think it's only the West which is suffering, especially in Europe, from the actions, all the sanctions imposed. These are the only countries that are behind this, and the vote in the Security Council shows to me that most of the world is not with it. And if you add up the population of Brazil, Russia, no, Brazil, India, and China, that's like 39% of the world's population, just in those three countries. So the only worry I have is that Putin's speech yesterday was quite explosive in terms of what he said about the West. And of course, we won't hear much about it here.
No.
But
So on that note, let's get into it for people who haven't seen it. I've got the translation.
Yeah,
Uh,
I'm sure
I've
the people who run the West are aware of it, and what it's going to lead to, I don't know.
Well, Putin's, this is the official translation on the Kremlin website, en.kremlin.ru. And he said, quote, "But people cannot be fed with printed dollars and euros. You can't feed them with those pieces of paper. And the virtual, inflated capitalization of Western social media companies can't heat their homes. Everything I am saying is important. And what I just said is no less so. You can't feed anyone with paper. You need food, and you can't heat anyone's home with these inflated capitalizations. You need energy."
Yeah, I mean
So,
that's corresponds with my view of the cyclical nature of the markets, and many other people have been saying since actually late in 2019, early 2020, that we're going from a world where stocks, bonds are the major asset, and into a world where real things like commodities, yeah, anything real becomes worth more in relative terms to that. So yeah, and I think it's weird that Putin is saying the same thing, but I think that's why I've been, yeah, and I've known you can't eat gold and silver as well, of course, but with the paper is that they can create so much paper with no effort that the paper becomes worthless, and you can't exchange that paper for real things. But with at least gold and silver, um, yeah, farmers will, if the paper currencies collapse, farmers will accept silver and gold for their crops. So, and I think that's why Russia, I think they've known for many years that the fiat currency systems, they all always go to zero, and that's why they've been buying gold, so much gold. The Russian officially, of course. I'm
yeah,
not
that
sure.
we know of. Yeah, that's agreed. They
Well,
increased
I
their
don't know
reserve.
about Russian people, whether they've been buying gold as well. I've known that Russian people used to have a lot of dollars. They kept dollars.
Yeah, that's absolutely true. And I suspect the wealthy, I know a couple who certainly have gold in Switzerland. And the Saudis have a lot of gold and they are looking to sell it, from what I hear. And they're
Yeah.
finding a few Russian buyers for that Saudi gold.
Well, I
Just
mean,
to
that
wrap up,
comment is almost
yeah.
like dissing the central bankers, which is what I've been trying to, to discredit them for years. It's weird.
Yeah. Just to finish up, you mentioned a little bit of history, as did Putin in his speech. He put one of the closing, this is the last paragraph I'll quote here. And here it is important to recall that the West bailed itself out of its early 20th century challenges with World War One. Profits from World War Two helped the United States finally overcome the Great Depression and become the largest economy in the world, and to impose on the planet the power of the dollar as a global reserve currency.
Yeah,
What
I
do
can
you make
go
of
over
that?
that. Yeah, well, he knows his history because, well, how did they bail themselves selves out in World War One? Well, they suspended the gold standard in 1914, because if they hadn't suspended the gold standard, they wouldn't have been able to. World War One would have ended in 1914, uh, and I suspect what he's saying as well is that in the run up to World War One, even though I haven't done the study, Western countries were in trouble financially, so it gave them the excuse to suspend, because suspending the gold standard is like defaulting. Because back then, I could take my £5 note to a bank and demand five gold sovereigns, and that stopped. And then the U.S., of course, they made a fortune, not just in World War II, but in World War One, because they were out of World War One up until 1917. And there's a really good pamphlet book, so to speak, called "War is a Racket" by Brigadier General Smedley Butler, who's the most decorated Marine in U.S. history. And he goes over all the profits that the big U.S. corporations made from World War One. And it's, I think, over 1,000 millionaires were created, because during war, You can charge governments a lot more because they don't care. They don't really.
Hmm.
It's not their money. So the U.S. Uh, accumulated a lot of gold after World War One. It's one of the reasons why I think we had the Roaring Twenties as well. And then you had the Great Depression. They confiscated all the people's gold. A lot of European gold had gone to the U.S. as well. And then by the end of World War II, I think the US had 2/3 of all the official gold reserves. And that's how they were able to create the Bretton Woods Agreement and make the dollar the center of the system. So the dollar was fixed at $35 an ounce, and then all the other currencies are fixed to the dollar. And you needed dollars though to settle trade. But if you had a surplus of dollars, you could go to the U.S. Treasury and ask them for gold. And yeah, and the U.S. of course abused that exorbitant privileges. I think one of the French finance ministers said in the 60s, with the Vietnam War, the Great Society, social spending, and by 1971. Gold was flowing out really quickly out of the US Treasury, so they had to default. We call it closing the gold window, which is a euphemism for it. So the US, I think, had 22,000 tons and like early at the top in the early 60s. And by 1971, they were down to like 10. And I think now officially they have just over 8,000 tons, which has really never been audited in Fort Knox.
So are you surprised that Biden used this opportunity to send 13 billion more dollars, he said?
What, to the Ukraine, wasn't it?
Yeah. Yeah.
Well, it doesn't really matter. It's just mythical values. And the problem with the fiat currency system, or not a problem, but the nature of it is the worse it gets, the more debt, because the fiat currency is backed by the national debt. So if you don't keep inflating or adding debt, it all collapses on itself. So yeah, and I'm not sure, who's going to benefit from that 13 billion. There's always ways, places that money goes. I'm sure it's going to go to some of his supporters, multinational.
Just to clarify, 4.5 billion is to pay salaries, just to keep the Ukrainian government running.
Really?
Yeah. Let's switch gears in closing now and head back to the UK. So give us a summary of recent events under the... we've talked about Nabulina and her competency. Let's go to the other end of the spectrum to Liz Truss.
Yeah, and also maybe Andrew Bailey. But yeah, well, Liz Truss, I mean, she's just just become prime minister. I did follow her a little bit when she was foreign secretary, and she made Lavrov look like a giant, a genius. So I don't really have much confidence in her. But the problem with the UK economy is not this last week and this mini budget. It's been brewing for decades. You could argue it's been brewing back to World War One, and prior to World War One, there was no welfare state, and then after World War Two, they got the NHS, and welfare state has grown so much. And unfortunately, the UK, a lot of people they expect the government to do everything for them, and we had the crisis of '08 where it looked like everything could collapse, but they bailed it out with borrowing from the future, because that's what governments do. The way to bail out the bank, they borrowed 500 billion on the back of the taxpayer, and they never reformed anything, and they kept interest rates low up until last year. It was below 1% since 2008-9, which is crazy, and they kept doing more and more QE. And then you had 2020 again, more QE, more borrowing, and to think that a mini budget is the problem. It might have exacerbated or been the little snowflake that got the avalanche going, but I think the snowball had been growing for decades. And I don't think there's a solution to it, unfortunately. The solution will be the collapse of the currency here. It's going to be painful. It's already painful. And it doesn't help that we've been so adamant in not trying to work something out in terms of the Ukraine. We're just pushing and pushing Russia. I think there was in April the possibility of having negotiations for peace, but it looks like the U.S. and the U.K. scuppered it. So it's like in with COVID, Boris Johnson was keen on letting the herd immunity evolve, and then all of a sudden he changed his mind and he did lockdowns, and they're going to blame it on on the COVID, and they're going to blame what's happening now on Putin. But I would say it's more the response, government policy responses that have exacerbated the problem. But one positive thing I would say is that the quicker this whole thing unravels and the currency collapses, the quicker we can recover and move on, because currency and money are just a human construct. The economy itself, real things, are still around, and I think the British people are well educated enough and hardworking, uh, to recover from it, and maybe people will realize that only they can help themselves, not the government.
So, can I get your interpretation on this article in The Guardian that I featured on one of my videos? And this is Liz Truss to hold emergency talks with the OBR after
Yeah.
failing to calm markets.
The OBR is the Office of Budget Responsibility. It was created well, ever since the '08 crisis. I think it was the conservative Liberal Democrat coalition. They created that to pretend that they have fiscal responsibility. And this meeting was held yesterday, and they announced it on Thursday to calm the markets down. And the markets were thinking that they were going to come out with the forecast yesterday, but the government actually told the OBR to hold off coming out with those forecasts until the 23rd of November, which is a long time considering what's going on. And I think that's why the markets are still going to punish Liz Truss and Kwasi Kwarteng in the next few weeks. I mean, the OBR, when push comes to shove, they're gonna side with the government. They're gonna try to embellish the government because they were created by government, so they're not really independent. I think that was just trying to calm the markets down. And yes, the pound has rebounded from like around 103, 104. I think we closed at 111.60. But I would say that's just a normal technical reaction. We might go up a little more, but I think it's going to turn south again.
Okay, let's go with that. So, can you give me your rough forecast for, I'd say, the next 3 months, in particular January, because that's been cited as January for Europe, let's say the Eurozone, include the UK here, will be the toughest month. That's what's been said. So, what's your sort of short-term forecast?
Well, I look more at the bigger picture. I try not to forecast things, but I was saying last year already that with the energy prices going up so much and with inflation going up, that things are going to get a lot worse. Um, I guess, yeah, my forecast, the one thing that I think is really going to hurt the UK economy is going to be rising interest rates. And especially not the Bank of England one, but yields in the bond markets. And what that's going to mean is mortgage rates. They're already accelerating. I think a lot of people took on first mortgages in 2021 when they were flush with cash, because if you remember, people would stayed at home, didn't have to work, didn't go on holiday, so saved money. They put a lot of money down for their first home or second home, and the rates were really low interest rates. So my forecast is that, yeah, the economy is going to go into a recession, housing is going to suffer, and you probably know well, being from the UK, that real estate and property is such a big part of everything. So I see that a lot of the economists in the city and the government are saying that the economy is not in a recession, but I think it's just wishful thinking.
And you actually caught out the Bank of England, did you not, in a weird way? Because I shared one of your videos and posts where you have been tracking is it the inflation,
Yeah,
the Bank of England calculator?
yeah. I mean, I guess the Bank of England can say, well, the government changed that, so we're just using what the government did. But basically, the government changed the way they calculate a CPI all the way back to 1949. And so it's made a big difference. And prior to the changes, uh, let's say when the Bank of England was given independence in 1997, they were given an objective of keeping CPI at 2%. That was the target. And prior to these changes in CPI, uh, the CPI since 1997 until now was running at 2.9, which doesn't sound a lot, but they're not meeting their targets. But now you go to the inflation calculator, and they say that the CPI since 1997 is 1.9. So basically saying, oh, the Bank of England has done a great job. So you kind of wonder if they're working together with the government and the statisticians. So, and it also shows that you can't really trust the CPI numbers. Their reason is that the new number better reflects inflation. Yeah, for them it does. So yeah, it's weird. But the other thing that's happened, there's a kind of government bond in the UK called index linked. Indexes it to the RPI, which is the retail price index, which is a measure of inflation. And it's always higher than the CPI. But I think a high court just decided recently that the government from 2030 can use the CPI to link these bonds. So basically, that's a technical default, and investors were thinking that they're going to get a lot more for their investments. And these index-linked bonds, they're widely held in pensions. So it could be even related to the problems we've had in pensions now. The fact that they've come out a few weeks ago and said, oh, from 2030, it's going to affect the pensions. And it might have made these pension funds leverage themselves a bit more to get more returns. But yeah, it's it's a mess.
Yeah, I've heard a lot about the pension funds being at risk, and essentially people should prepare to not have a pension in the future. I'm going to stretch you with this very last question. I've stated in my videos how I foresee a collapse of the Western economies, pretty much Great Depression scale, in my point of view. If that does come to pass, I have said that it would be naive to think that where I am in Russia, that the economy here wouldn't be affected. We can rest on our laurels and say, oh, wow, the Russian economy, as we featured, Nabiulina has been extremely competent in countering those sort of artificial man-made measures. But if the deck of a house of cards collapses over in the West, almost like a tsunami ripple, I foresee that that would impact the Russian economy. So what would be your idea if things happen as the way I've described, and perhaps you've even been warning about on your channel? What do you foresee the global effects would be?
Yeah. Well, for Russia, it would impact Russia, of course. But I think it was in 2019 that Putin, I think it was at St. Petersburg as well. He said, well, the dollar, we all know the dollar is going to collapse soon. So I think Russia has been preparing for this, but it's going to impact the whole world if the Western economies go into a Great Depression, which, yeah, could be as bad as the 1930s. And not to talk about maybe the political and geopolitical ramifications of it. But I would say that Russia is probably in a good situation, good position to face this kind of environment, mainly because it doesn't have that much debt. To me, it seems like the debt levels are low in Russia.
Excellent. Thank you very much indeed. I think we'll wrap it up there. So I'll just repeat to everyone, please go ahead and visit Monaco64. Of course, links will be in the description to check him out. Mario, would you like to say anything more in closing?
Well, yeah, I think yesterday was an important day because of what's happening in Russia and vis-a-vis the Ukraine. And unfortunately, I think things are heating up. So just what can I say? Just live life without fear, because I think that's one of the things the people in the West want you to be is fearful. And when you're fearful, you don't do things. And yes, look after yourself, your family, close friends, and the community.
I couldn't agree more with you there. Thank you very much again. And guys, let us know what you think in the comments below. I personally would like to have you back, Mario, in the future as we have more developments and updates and to give us that more of a professional perspective and interpretation.
Great. And yeah, I will come back, and it'd be nice to have you back on my channel too.
It'd be my pleasure.